Financial Decolonisation Part 2, CBDC and RWA Tokenisation. In this second installment of Financial Decolonisation, the India Way, we'll delve deeper into scope of blockchain-based solutions in global finance, including CBDCs and RWA tokenization. Let us begin by exploring the connection between the conceptualization of blockchain and de-dollarization. Blockchain is a technology with vast practical uses, and private cryptos are non-financial instruments that represent a potential national security risk. In 1971, US President Nixon abolished the gold standard for the dollar. As a result, the dollar continued to dominate global finance as the world's single reserve currency without being backed by any physical asset. Let's recall 3 significant years that marked blockchain's evolution from Part 1. In 1979, the Merkle tree was conceived. In 1991, the first white paper on blockchain was published. And 2008 marked the advent of Bitcoin. Notably, the US established diplomatic relations with the People's Republic of China in 1979 and positioned China as a key manufacturing hub. Following this shift in diplomatic relations, the PRC also enacted a stringent one-child policy to address economic development concerns in the same year. This strategic change in the US-China relations averted a financial crisis following the unpegging of the dollar. Just to add, the US awarded China Most Favored Nation status in 1980. During the 1970 India initiated minor reforms toward economic liberalization, albeit with limited outcomes. In 1991, India embraced liberalization, privatization, and globalization with a new economic policy. The same year, the USSR collapsed, which caused internal strife within the Chinese Communist Party. In response to this crisis, PRC chose to join the Asia-Pacific Economic Cooperation in 1991 and began improving ties with the US. Meanwhile, a white paper on blockchain technology was also published in 1991. Dr. Ankit Shah frequently describes the events beginning in 1991 as the attempt at de-dollarization. In several discussions, he linked incidents between 1991 to 1999 like the Yugoslavia War and dot-com bubble, hinting at a well-crafted strategy to manage geoeconomics. Since 1971, significant geopolitical events ensured that the problems arising from the fiat dollar remained in the shadows. This trend persisted until the 2008 global financial crisis. The crisis brought forth Bitcoin as an alternate store of value compared to the fiat dollar. Since then, funds have gradually moved from a Western-centric banking system operating on an unpegged dollar to an unregulated, decentralized cryptocurrency system. Those familiar with Ankit's discussions will instantly call out that the West is de-dollarizing through crypto, while BRICS nations are collecting all the gold. By 2025, Bitcoin and the cryptocurrency markets have bloated to unprecedented levels. This indicates that non-financial instruments, deemed a national security threat, are now perceived as an appealing medium of store of value, merely for speculative unrealized gains. With this context in mind, let's examine CBDCs from an Indian perspective. CBDC stands for Central Bank Digital Currency. The Rupee represents India's CBDC initiative, signifying a centralized, regulated legal currency issued by the RBI on a blockchain network. Just like the RBI prints and circulates currency notes through banks, it will mint digital tokens and distribute them through these banks. Notably, CBDC differs from UPI. UPI is primarily a payment interface which facilitates financial transactions, whereas the e-Rupee is legal tender operating on blockchain-based digital ledger technology, which can be used for domestic and cross-border settlements. Numerous Indian banks are currently conducting user testing for CBDC adoption. Many individuals may have received SMS messages and emails promoting e-Rupee and digital tokens from their banks. Because the CBDC will utilize an RBI-regulated blockchain network, there is assurance of secure transactions that are tamper-proof, and it can also facilitate cross-border settlements with other nations. Russia is actively developing a digital ruble initiative and conducting user testing, while China is working on a digital yuan. Thus, although each country will operate its own regulated blockchain network for CBDCs, they can engage in cross-border settlements through blockchain interoperability. The potential for CBDCs to serve as an alternative to SWIFT becomes evident through the concept of real-world asset tokenization, or RWA tokenization. As the term suggests, real-world assets, such as gold, precious metals, and commodities like crude oil will be tokenized on a digital ledger. This is similar to how stock markets trade electronic shares of companies via stock exchanges. For instance, if India purchases oil from Russia, the entire transaction can be conducted using RWA and CBDC. Russia can issue digital tokens that represent tokenized commodities, like oil in this particular case, while India can pay for it using Rupee. Upon dispatching the product, real-time monitoring can take place on the blockchain network. Logistics firms, insurance companies, banks, and others can be integrated into the blockchain network for real-time updates. Moreover, smart contracts, a blockchain feature, can also be utilized. These contracts are programmed instructions that automatically execute specified tasks upon meeting predetermined conditions. Ownership of physical assets can also be recorded and transferred via the blockchain network. The IFSCA, International Financial Services Centers Authority, published a consulting paper on RWA tokenization in February 2025. This paper clearly stated that there are plans to set up and streamline the digital token segment, while clearly outlining that digital tokens backed by real-world assets are distinctly different from the private cryptos, which pose national security risks. One of the goals of the consulting paper is to evolve the RWA digital token ecosystem for issuance, trading, custody, and settlements. RWA holds a lot of promise for domestic business within India. Sectors like agriculture and food processing can deploy blockchain-based solutions in tandem with logistics businesses and the insurance sector. Not only can the products be tokenized and sold on blockchain directly to users, but the logistics and insurance companies can provide instant solutions and real-time updates on the same network. Manufacturing companies can also use similar systems for internal controls and shipping finished products across India and their export markets. RWA can also be implemented in the real estate sector, where residential and commercial properties can be tokenized and listed partially as digital tokens to investors. These are areas which need symbiotic synergies between developers from a technology background and finance professionals who can create a functional financial model without the technical knowledge of coding and programming. Part 3 of this series will cover opportunities in the field of RWA tokenization for students, professionals, as well as entrepreneurs.